This episode is brought to you by HubSpot. Now, did you know most businesses only use 20% of their data? That's like playing a football match with 1/5 of the team. It's going to be hard to win, right? Unless you have HubSpot. Their customer platform gives you access to untapped insights in emails, call logs, meeting transcripts, and all the other data you need to grow your business. Because when you know more, you grow more. Visit HubSpot.com today.
Hello and welcome to the Rest is Money with me, Robert Peston. Today it's me and the world famous economist, Dr. Art Laffer. Incredibly famous for, certainly in economics, you might regard it as the most famous curve of all time, the Laffer curve, which makes a very important point about the trade-offs between tax rates and growth. No one, I think even Art, would claim it's anything other than very controversial because the shape of the curve is hotly debated. And the reason it's hotly debated is because economists profoundly disagree which kind of tax rates, when you put up taxes, you start to lose revenue. And that's and indeed, when you cut taxes, what kind of tax cuts are going to generate revenue. So there's a ton of stuff we need to talk about. That, I mean, you're probably bored sick talking about it, since presumably people like me are always talking about it. But I actually want to start by looking at a book that you've co-authored. It's called Prosperity Through Growth. So Britain obviously is a country that feels very growth challenged. We've had more or less economic stagnation since the financial crisis, and the Prime Minister, leaders of the major political parties are all obsessed with how we can get the growth rate up. Now, in this book, you write the introductory chapter in which you talk about the 5 grand kingdoms of macroeconomic policy that together determine a nation's economic destiny. And they're sort of, these are not going to be categories that people are going to be surprised by. You talk about taxation, government spending, monetary policy, regulation, and international trade. And, you make the important point that if you want to get an economy motoring again, you got to get all of these areas of policy right. If you look at a country like the UK right now, and you were looking at your so-called 5 kingdoms, which one would you start with?
I would start with taxation, but that's because it's always been my favorite. Those doctors that get their names attached to horrible, vile diseases. And, I'm sort of like that. I've got my name attached to basically taxation. And taxes in Britain are extremely important, especially since Gordon Brown really raised it from 40p to 50p. And then you got the next administration, Cameron, coming in and doing the big analysis as to what happened to the economy. And that's when they really started the tailspin here in the UK. And
we should remind people the top rate is back at 45p. That was brought down by
Yes, it is. Went to Cameron, back down to 45.
Yeah.
Yes.
Yeah. So we should remind people of that. But if you look at the UK, because this is, in the introduction, I said what's hotly debated is when tax cuts are income generating. And if you look at the UK, are there particular tax rates that you believe that if they were cut would in 2-3 years become net generators of tax?
Yes, there are, and the income tax is one of them very clearly.
So you think the top rate of 45 is too high, do you?
I do. And especially given what happened when Gordon Brown raised the rate from 40 to 50, you saw the deterioration of the economy, you saw the loss of revenues, people leaving the country, all of those things that are very common sense. And they did. And then Cameron came in and he lowered it back down, but he didn't take it back to the 40p that it was. He took it back only to 45p. And you've had a very sluggish period in the British economy since then. And it's very sad because, Britain can do better. And when you talk about it being the controversies and opinions and all of that, we have huge amounts of evidence, Rob, as to how and where these taxes do hit. For example, my prior book, which is Taxes Have Consequences, I looked at the whole U.S. income tax from 1913 to the present. We have every single tax return. It's not estimation, it's not sampling, it's none of that. We know the last person in the top 1% We know the top person and the bottom 99%. Now, they don't give us their names, but we have all of them. We have all of this information. We don't have to guess about this anymore. This is about facts, not how you feel. And we know that every time we've raised the highest marginal income tax rate in the U.S., the economy has underperformed. Tax revenues from the rich have gone down, not up. And the poor have been hammered. And every time we've lowered tax rates on the rich, the top 1%, the economy has outperformed. Tax revenues from the rich have gone up, and the poor have been benefited. Now, income inequality increases when you lower tax rates on the rich. That's true, but that's because the rich get richer faster than the poor get richer. But the poor do really well under very rapid growth periods, and that's really important to help the poor and make sure you provide opportunities for those who aren't blessed with the type of opportunities you and I are.
I mean, look, as you will be aware, there are economists who dispute some of your findings. I mean, I think from memory, it is the case that when Cameron cut from 50 to 45p, I think there was an increment to tax revenues in the UK. Now, there will be some who say, nonetheless, it's not obvious that cutting from 45 back to the other higher rate we've got to 40 would generate revenue. But I suppose the question I would ask you, there are so many politicians who trade completely understandably, because this is something that British people feel, that on the idea that the economy does not work fairly for everybody. Inequality is a big source of discontent among, millions of voters. So, I mean, just out of interest, how would you go about, even if you could absolutely beyond any reasonable doubt prove that cutting taxes for those with the most wealth and the most income would ultimately lead to a faster growing economy that would benefit everybody? How do you sell that to people who are currently really struggling to pay their bills?
Well, that's very true. And if you raise the rates on the rich, they'll struggle even further. The problem is you've got an elephant in the living room there, and everyone's trying to not look at it. They're all virtue signaling that how could dare you be one who doesn't raise taxes on the rich and doesn't put handouts to the poor. And, if you do that policy for long, just factually, the economy will grow slower. These people will be worse off, not better off. And, somewhere along the line here, Rob, we have to become factual. Now, with Reagan, we did it. We cut tax rates from 70% to 28%, which is pretty big. We cut the corporate rate from 46 to 34%. We went from 14 tax brackets to 2 tax brackets. And we created one of the greatest economies in U.S. history. With Donald Trump, we had the Tax Cuts and Jobs Act, the same response. Now, you can see what happened when the four stooges did it, Johnson, Nixon, Ford, and Carter. When they raised tax, you can see how the economy went the opposite direction. This should be about facts, not how you feel.
But here I've got to really challenge you.
Please.
Because we do have to distinguish between rates of economic growth, which is one thing. And, there's no question that under Trump, and certainly, in the latter period of Reagan, the American economy performs pretty well. But that is not the same thing as how much you raise in tax revenue, because in both cases, the tax cuts, as I think you've accepted, were not self-financing. The tax cuts, certainly in the recorded period, led to falls in tax revenues.
If I could be precise on it, tax revenues from the top 1% under Reagan went way up. Now, the other tax revenues, remember that Reagan cut tax rates across the board. The cutting of the tax rates in the lowest income tax brackets did not raise revenues. That's
right.
Very, very true. But the tax rate cuts in the top 1% raised a lot of revenue. Now, that's Marty Feldstein. All of their studies of the 86 Tax Act show that very, very clearly. And when you look at it in Britain, the same thing. Where those taxes come is really majorly important. But when you cut the lowest tax rate in the system by itself, you're going to lose revenues, period. You are. When you cut in the highest tax rate, that category, you're going to raise revenues because these people, they can shelter their income. They can hire lawyers, accountants, deferred income specialists, favor grabbers, lobbyists. I mean, they have the means to do that, and they have the facilities, the ways to shelter their income. They can change the composition of their income, the location of their income, the timing of their income, the volume of their income. They can do all of this stuff that other normal people can't. And so therefore, when you could look at the top rates, Rob, it's where you get the biggest kick, the Laffer curve extreme effect. Now, in the lowest rates, you get the normal range of the Laffer curve. You get your lower rates, you get less revenues. But in the highest rates, you really get that kicker coming through. Those are facts. Now, how do you do it? That's the question. You could look at facts. And when you look at what happens in these countries, the facts are that when you cut tax rates in the rich, you collect more revenues, you collect a faster growth rate, and you also benefit the poor more. Now, that's what happens. Now, whether you can sell it to people who are feeling very guilty about being privileged themselves, I have no idea, but we've sold it a couple of times in the past. We sold it with Reagan. We sold it with Trump. We sold it with Thatcher. We cut the highest rate with Lady Thatcher from 98% or 97% down to 40%.
But nobody would, so this is where the argument comes. I mean, look, nobody in their right minds would disagree that as tax rates approach 100%, which they did in Britain before Thatcher.
Of course, they did, yes.
That was a massive disincentive to entrepreneurialism. And there is absolutely no question that the kind of reforms that she put in place, reducing those top tax rates, were very good. They were very good for the British economy, and they ended up over the medium term helping, the vast majority of British people. I mean, in a country like the UK, the reason why we're not going to get to that North Star while you and I are alive, for better or worse, is because in the short to medium term, even if you fundamentally believe that that is where you got to get to for a much more powerful economy, the revenue loss in the short term, as you move there, is so great, particularly when in the country like the UK, you've got debt as a share of GDP of 100%. We might want to get there, but we would almost certainly die on the operating table before we got there.
Not true. Not true.
Okay, go on. Explain to me how we avoid dying on how we persuade investors not to pull the rug from us in the meantime.
I got you. In the 86 Tax Act, we dropped the rate from 50% to 28%, which sounds like a horrible drop in the U.S. there. But we got rid of all the deductions, exemptions, exclusions, the loopholes, which paid for all of that. So the static revenue loss was zero. All we did was lower rates and get rid of all the deductions, exemptions, and exclusions, so we made it a much less gristy. There was no net revenue loss in that, and by doing the rates down and getting rid of all the deductions, we didn't have any static revenue loss, and we spurred economic growth like mad. There are lots of ways of skinning this cat. And it's not just reducing rates. It's reducing rates, but also getting rid of all the write-offs, all the lawyers, all the accountants, all the deferred income specialists, all of this garbage that's in the system, and do it a low rate, broad base, so no one has any place to put their income except that it's taxable. And that's the way you do it. There are lots of ways of building these systems to make them really, really, really work. And it's not just lowering rates by itself. It's lowering rates and getting rid of deductions.
But look, I mean, the conditions in which you did that were not conditions where, right now, as I said earlier, the debts of the government are approximately equal to our national income, our GDP, right? In America, you've got, the national debt in America is significantly bigger than that as a share of national income. You've got investors in bonds, lenders to governments, increasingly anxious about the capacity of governments to service their debts. And we did have an example in recent times of a British Prime Minister trying to cut taxes. She said she was following what you wanted her to do. Initially, you were quite, you praised her. But, poor old Liz Truss, she does her mini budget with quasi-quating. Bond markets massively turn against her. She has to backtrack. I mean, surely that is an example of, essentially why, even if you believe in the theory, in today's world of high debts, highly indebted countries, it's just impossible to get where you want to get to.
Well, you may be correct politically, but let me just say this about that, if I might. Liz Truss never put in a tax cut at all. She just proposed them, and before putting in anything, the whole thing collapsed. That's true. But what I'm suggesting is you're correct. You can't just cut taxes and have huge increases in deficits. I totally agree with you. But what you need to do is match the tax rate reductions with getting rid of all the exemptions, exclusions, deductions, write-offs, credits, all that nonsense of loopholes.
Did you explain that to Liz Truss?
Of course. I've explained it in every book, every article I've ever written. Almost all of the ways that the rich avoid paying taxes, we got rid of under Reagan. And we did it under Trump as well.
Why didn't she listen?
I have no idea. Maybe I don't speak English quite well enough.
You're a brilliant communicator. Please don't put yourself down.
Thank you very much, sir. They didn't do it. And that's probably where I think Liz Truss lost. Now, Kwasi was very clear on this stuff. I thought Kwasi Kwarteng was just very clear. But, to push this in one big thing and scare the living hell out of everyone in Britain was not probably the right way to go, because she didn't even get to put in any one of her policies. None of them were ever implemented. She just got thrown out long before anything took effect. So, you want to do it so it's successful. If you're going to lose the battle, stop fighting. Back up to where you can make it work.
So can I just say broadly, because she didn't talk, frankly, about removing some of the exemptions she talked about, but she did talk about in the medium term cutting public spending. But in the short term, the problem was it looked like the deficit was going through the absolute roof. These were unfunded tax cuts, and that's why lenders to the UK got very panicky and just said, this is too risky.
Yes. And that's why I've never proposed it with being unfunded. What you need to do is make it fully funded by getting rid of the deductions, exemptions, exclusions, and getting a low-rate, broad-based flat tax where the rich do pay their fair share, as opposed to hiring all these lawyers. I mean, Warren Buffett in 2010, in his letter to the New York Times, he made $12.5 billion by the Hague-Simon definition of income and paid a little less than $7 million in taxes. Now, he paid 0.06% of his total income in taxes because of all the deductions, unrealized capital gains, all of that other sort of stuff. You've got to get rid of that stuff when you lower rates. You're totally correct. No one wants to increase this outrageous debt. Clearly not. But you need the growth. And you need the growth desperately, because without the growth, there is no long-term solution. Do you want to follow the path? Here you've got Britain, the founder of the Industrial Revolution, home of Adam Smith and David Ricardo, the leading world, and they are now the example of collapse, economic collapse. We need to bring Britain back by doing it logically, clearly, without big deficits.
Now I'm thrilled that you've mentioned Adam Smith and David Ricardo.
Thank you.
Because we're going to go for a quick break. But after the break, what I want to talk to you about is, another one of your great kingdoms, as it were, that we need to generate growth, which is trade. And in particular, obviously, you've just heaped praise on Donald Trump for his tax policy. You are not quite so flattering of him, but let's get to the bottom of it when it comes to his tariff policy, because you are a believer in free trade. So in just a minute or two, let's get into the thorny area of Trump's tariffs. See you in a minute.
This episode is brought to you by Wealthify. If you've ever thought, I should really do more with my savings, you're not alone. Most of us are busy juggling work and family life, so investing can feel complicated. Thankfully, Wealthify makes it simple. You put your money in, their experts take care of the rest. No picking your own stocks, no jargon, just a managed investment plan you can keep track of 24/7. Open a stocks and shares ISA, personal pension, or a junior ISA for the kids. And with over 100,000 customers and the backing of Aviva, you know your money's in experienced hands. Plus, when you deposit or transfer to a Wealthify stocks and shares ISA, you could earn between £50 and £1,000 cash back. Please note that minimum investments apply and cashback varies by the total amount of your deposit or transfer. So for investing, savings and pensions, the smart money's with Wealthify. Open your account today at wealthify.com. Wealthify is authorised and regulated by the Financial Conduct Authority. Offer registration closes on the 2nd of March 2026. T's and C's apply. With investing, your capital is at risk.
Hello and welcome back to The Rest is Money with me, Robert Peston. I'm thrilled that the distinguished economist Art Laffer is still with me. And I'm right in thinking that President Trump, when he was first in office, I think he didn't award you almost the greatest honor that can be awarded. So did you get the Congressional Medal of Freedom? Something like, is that right? Is that what you got?
Presidential Medal of Freedom. I didn't deserve it, by the way, Rob. I didn't deserve it, but I'm not giving it back. I love it.
Okay, I don't think anybody expects you to give it back, and I'm sure you did deserve it. But and this is just to demonstrate that, historically, he's listened to you. You've felt that some of what he did, particularly on taxes, was the right way to go. But, we just talked about, our great intellectual heritage in the UK, economists like Ricardo and Adam Smith. You, are very much an economist who recognizes that free trade is a generator of growth.
Yes.
And yet we have a president that you have been supporting who is undermining free trade with these massive and in many cases unpredictable tariffs. You must surely take the view that Trump's tariff policy is wholly inappropriate, wrong, damaging America, damaging the world.
Let me, if I can, address. You're completely correct about tariffs, quotas, non-tariff barriers. Restrictions on trade are killers. We built our country on free trade. We built it on the transfer of resources from Britain to the U.S. and Holland to the U.S. We built it with trade deficits that brought in the capital that combined with our natural resources, our labor, and we created the economic miracle. That is the U.S. We all know the Smoot-Hawley tariff of 1929, 1930 killed it. It led to the Great Depression, which led to World War II. It doesn't get any worse than that. I was in the Nixon White House when Nixon did the 10% import surcharge, when he did the job development credit that excluded that. We're very clear. I was there also with Reagan when we did NAFTA, when Kennedy did the Kennedy round tariff, which led to great prosperity. You're completely correct on the facts. But where you are wrong, I think, now, I'm not sure of this, so let me say it. Donald Trump uses trade in a different way than the U.S. has ever done. He uses it to negotiate. He told me personally that the U.S. is the freest trade large country, which is true, in the world, and all these other countries have tariffs and quotas and non-tariff barriers against U.S. products and against other countries, and they don't understand that it's hurting them too. They are mercantilists in the worst form, and all they care about is access to the U.S. market. So he tells me I'm going to threaten 50%, 100%, 200% tariffs to bring them to the negotiation table to negotiate freer trade. If you look at what he did in his first term, Rob, in his first term, we had 5 trade deals. We had the USMCA, which lowered tariffs, didn't increase them. We had the Japan deal, which lowered tariffs and non-tariff barriers, did not increase them. We had the Korean deal, we had Brazil, and we had Colombia, all of which were freer trade. We know that at the G7 meeting in Ottawa, when he was going to meet with Kim Jong-un and he had to leave early, he told the other 6, including your prime minister, he told the G6, he said, gentlemen, I've got to go to Singapore to meet with Kim Jong-un. You want me? No one likes nuclear war, but I am prepared right now to get rid of all U.S. tariffs, all U.S. quotas, and all U.S. non-tariff barriers if you will do the same. And they all looked at the ceiling, they looked at their shoes, say, bye, Donald, see you later. What he does is he uses these tools as a negotiation tool, and I believe you're going to see him use it to end wars. In Ukraine, I think he's going to use it to end wars in Gaza. I think he's going to use it to subdue the hostilities of China. I think he's going to use it to bring tariffs down and free trade. He, after all, was the CEO of an international company, and he imported 2 foreign wives, which means he really does believe in free trade.
I'm a great respecter of your economic analysis. I'm not sure that's the most profound point you've ever made. But anyway, I have got to sort of basically challenge quite a lot of what you've said. I mean, first of all,
fair enough.
Look, First of all, look, I'm not sure I'm right. I'm not denying that, in particular, in the case of, what, depending on how you measure, it's either the world's, second biggest or biggest economy. In the case of China, right, there is no question that they used, subsidies, currency manipulation, that their trading tactics were certainly, by all historical standards, unfair. And I completely understand why, essentially Trump, or indeed any Western leader, would be putting pressure on China because they, engaged in essentially very unfair trading tactics. So no question about any of that. And you could even argue in the case of a country like Germany over many years with its automotive industry, that the weakness of the euro gave them a competitive advantage over quite a long period of time. But nonetheless, even against that backdrop of imperfect trade, which we had, there is still no question in my mind that the era of globalization, which undoubtedly has been brought to an end by Trump, what did represent way freer trade than this new era with Trump, where he is putting enormous tariffs on more or less everything, also in a very unpredictable way, which makes business planning extremely hard. And, if I could see any time soon where he would, in a sense, get these deals from other countries and we reverted to a freer trading world, I'd be tempted to agree with you. But what I see is broadly now a new mercantilist tit-for-tat world of recriminations on all sides. One of the things that is causing enormous anxiety around the world at the moment is Chinese retaliation, which is taken in the form of restricting supplies of absolutely, they're called rare earth minerals, these absolutely essential ingredients for so many important industries. And there's panic in Europe, there's panic in America, so many of our high-tech producers, from mobile phones through to cars, are going to grind to a halt because they cannot get hold of these agreements. This is not a world of freer trade that is going to make people richer. And to be clear, the person who has put way more than talked about sand in the wheels of capitalism, this is sort of super glue in the wheels of capitalism. And Donald Trump has put it there. So I just put you again, I know you want to give him the benefit of the doubt, but at what point are you persuaded that actually he's doing the opposite of what somebody like you thinks is the right thing to do?
Well, I tried to give you 5 examples in the first term that he reduced tariffs, that he didn't increase them. I'm looking at what he does right now in negotiation with Ukraine and Russia. It's called Peace Through Strength. I watched what he did with the Gaza. I watched what he did with the countries.
Obviously, we all want to see peace in Ukraine. He's putting sanctions on the 2 big oil producers in Russia. No rational person would say that's a bad thing. Of course, he's right to punish Russia for what it's doing. But of course, what he's doing, punishing Russia for what it's doing in Ukraine, is obviously the right thing to do. But what I'm talking about is trade with, whether it's the European Union or Japan or China or, Korea. These are the world's most powerful economies, and he is undermining trade with everybody.
I'd make you a bet. I'll make you a bet of 1 penny or so. Never more. Just on principle, not on principle, if you know what I'm saying. That when you look at it a year or 2 or 3 from now, it will be a lot lower tariffs, a lot lower quotas. This is a strategy. When you take Donald Trump literally, don't. But you've got to take him seriously. And when he uses his negotiation strategies, I'm not a negotiator, Rob. I'm really not. I'm a wuss. I get all scared. I start sweating. I start crying. I roll up in a fetal position. I wet myself. I climb under the bed. But he doesn't. This man doesn't. He does know how to negotiate. And you sit here and say this, and you're expressing all of my fears. I am afraid of a protectionist world. I'm afraid of going against free trade. 100% with you. But when I look at what he does as opposed to what he says and all the strategy he uses, he's moving us in the right direction. He's like a Calistoga wagon coming down a Rocky Mountain road with no driver, ba-dum, ba-dum, ba-dum. And it's always going to be that way with Donald Trump. He does know how to negotiate. He does know that he can use flexibility in trade deals. He can put a tariff on one person one day, take it off the next day, do it double, triple. All of these things he knows how to use leverage. He's really pretty good at leverage. And when I look at the results of what Donald Trump has done, there's no collapse in the stock market. Believe me, like there was in 29. There's not. There's no collapse in the market like there was in 74. And I was in the White House then with Nixon. I was George Shultz's right-hand person. I was a wuss back then as well. Oh, don't do it, please. But it didn't work there. But he's getting it to work here. And I believe, and it's nothing I can do, but I believe when you look at this a year from now, 2 years from now, 3 years from now, you will come back to me, Rob, and you'll say, Dr. Laffer, you were correct. We're a lot freer trade nation. Prosperity is coming. I believe you're going to see it. But am I certain? You know, Rob, I'm much better at forecasting the past than I am the future. And that's why I looked at his first term. But I'm scared to death, but I think you're going to see a free trade president because his inherency. He ran an international company. Every CEO of an international company loves free trade. They all do. And he's no exception.
Property companies, most of his assets were in America. It wasn't really an international company. I mean,
I saw that golf course in Scotland, didn't you?
I've seen that. I still don't think that's quite the definition of
It's pretty cool. He likes that golf course a lot, by the way, just for the record.
Okay, all right. But anyway, obviously, look, we all hope you're right about where we end up with all of this.
Well, thank you. I think I am this time.
I just think, to put it mildly, the jury is out. The basic economics of this is, as you know, when you put tariffs up, that is a tax on consumption. American consumers are paying more for stuff, and I just hope you're right.
How do you get Japan to lower non-tariff barriers? How do you get them when all the politics of Japan is unprotected? This farmer, that business, blah, 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 blah.
Sure.
You've got to bring them to the table. How do you do it, Rob?
I hope you're right. But just
I
on
hope
that,
I'm right too, and I think I am.
Slightly frustratingly, we're almost out of time. I'm just going to make one very final quick point, which is the other. You talked about. I mean, you're right that we had a blip in the stock market earlier on, but it's recovered. We've had ups and downs. Broadly, yes. If you look at what's happening to the American economy at the moment, so much of it is being driven by this artificial intelligence boom. So much of what's driving GDP is investment in data centers, power, and all the rest of it, all associated with this boom. I mean, my slight worry, and maybe what we need to do is have you back on to talk about that, is that isn't sustainable, that isn't sustainable, and that we are building up conditions which probably won't lead to a 1929 style crash, but this does look increasingly to me like a bit of a bubble, and it might be burst. But should we talk about that next time?
I would love it. And I love this interview very much. Thank you for being you and pushing me all the way. But, I've been against other politicians because they do bad things. I hated Nixon when I worked in the White House, and I didn't like him. I loved Kennedy. I loved Reagan, obviously. I would never mislead you if I didn't think it was true. But am I sure he's going to be a free trader going forward? Of course not. But do I believe he will be? In my heart of hearts, I really strongly believe 3 to 4 years from now, you will see a much stronger economy. I have never been more excited about the world economy than I am today in all of the 5 grand kingdoms of macroeconomics, and also in peace through strength. So thank you, Rob, for having me. I love your show, by the way. It's really fun. And let's meet again.
It's been so much fun and so interesting, and I hope listeners think informative. So listen, come back whenever you want. We'll have you back on whenever you want. That's it for this edition of The Rest is Money. See you soon.